Welcome to the Traders Expo 2017 here in New York City. I'm Matt McCall. I'm joined by Dan Gramza. He is the president of Gramza Capital Management. Thanks for joining us, Dan.
My pleasure.
All right, let's talk a little bit about this market right now. We've been on a tear, as we all know. The people are referring to it like the Trump rally. You can call it whatever you want. But there's also a lot of people saying, uh-oh, let's take a step back. Where the correction's coming, the crash is coming. Where do you stand? Bullish, bearish, in the middle?
I'm bullish on the stocks. The issue is, we have administration addressing the Congress tonight. And so it's going to be interesting to see if he can live up to the hype right now that people are expecting. That's really built into the market. So what does he say about the details of his plans? That's going to be crucial. And from my point of view, I'm going to be starting to follow Japan in terms, or I should say the Asia session, after the U.S. session, because we're there in the futures market, we can see how the market's going to absorb that news. So that's one issue. But it's something I think we need to keep in mind, Matt, in that regard is our overall economy is not in that bad a shape. We have some economic foundation that we can launch from. Just one quick example would be interest rates from the point of view that, in the past when Yellen or the central bank would say anything about interest rates, the market would immediately drop, right? Well, we're not seeing that behavior because, one, the market's building it in. It feels that, hey, maybe we could handle this interest rate change. So I think those are signs that we're not seeing a shift in the psychology of the market, that the market still believes that there's further movement. I do as well.
It's a great point because the Fed's become more hawkish as the stock market hits new all-time highs. Typically they don't go hand in hand. More hawkish, okay, interest rates should be going up. They're not actually going up. So what's your view here on interest rates now? Because the Fed appears to potentially make a move in March. That it's now a 50% chance to make a move in March, up from just 30 a few weeks ago. How do you view that, the fact that stocks are going higher and interest rates are falling?
Well, I think the market is kind of building it in. I think there's a comfort there that we haven't had in the past. I also don't think they're going to do anything in March, although some of the numbers could support that. What does the Fed say? If the economics are there, we're going to increase interest rates. I really kind of see that towards a June time frame for them to possibly increase interest rates, and they probably will do it a couple more times because I think we're going to get the resiliency. But you know something, man? I think something that we should be paying attention to is inflation. That's the one piece that's really missing in this puzzle. And if you look at past Fed action, going back to the 90s or even before that, inflation is always a key part of that. That's part of their job, right? Well, we don't have that, and that's why I think March we're not going to see a change. Because they are still, when I hear them mention, in fact, inflation, it makes me feel good. Because it'll throttle down the number of changes that we're going to see in terms of interest rate changes. And that's why I think maybe June we're going to see something. So the interest rates and inflation, I think, are two things that we want to keep in mind when we look at that stock market.
I'm glad you mentioned it because the first I word, interest rates, we always focus on. Inflation has not been something we've been focusing on as of late, most people. But once you start hearing about inflation, then it's on its uptick because the media's always a little late by the time they start talking about it.
Yeah, you're right. That's a good point.
Yeah,
it's a good point.
Great advice, Dan. Thank you so much. Dan Gramza, president of Gramza Capital Management. Thank you very much for joining us.
My pleasure.